Welcome to our comprehensive guide on investing for young athletes. If you're a 21-year-old Division I athlete, you've got a unique opportunity. With a high income during your college years, you're already ahead of many of your peers in terms of financial capability. But what sets you apart is your focus on long-term financial security. This guide is designed to offer you actionable advice to help build wealth and potentially achieve early financial independence. Let's look at what we are going to cover. First, we'll talk about setting up an emergency fund. Then, we'll move on to managing your debt. Next, we'll discuss maximizing your retirement accounts and delve into investing in index funds. We'll also touch on the importance of financial education and seeking professional advice. Finally, we'll wrap up with a discussion on realistic retirement plans for young athletes like yourself. Let's begin with the first step, building an emergency fund. It's crucial to start with a high-yield savings account or a money market fund. This will serve as your safety net. Aim to save enough to cover 6 to 12 months of living expenses. This will prepare you for any unexpected costs that life might throw your way. Ensuring this financial cushion should be your top priority before moving on to other investments. Now let's tackle debt management. This flowchart shows your approach. Begin by analyzing the interest rates of your debts. If your car loan has a low interest rate, continue payments to boost your credit. However, prioritize reducing higher interest debt whenever possible. Every financial situation is unique, so consider your specific circumstances when making decisions. Next up are retirement accounts. If your income is below a certain threshold, you should max out a Roth IRA every year. Focus on investing in total market index funds, like VTWAX, for broad diversification. Also, if your university offers an employer-sponsored retirement plan, make contributions up to the maximum allowed, especially if there's an employer match. Remember, that's essentially free money, so take advantage of it. Here's a quick question for you. What strategy should you adopt if your car loan has a low interest rate? Option A, continue payments to boost credit. Option B, pay it off immediately. Option C, ignore the loan. Or Option D, transfer loan to another bank. You may pause the video now if you need a moment to think about it. We'll discuss the answer in the next section. The correct answer is to continue payments to boost your credit. If the interest rate is low, it might be beneficial to keep making payments to improve your credit score over time. Let's dive into investment strategies. First, opt for low-cost, diversified index funds such as those tracking the S&P 500. Starting your investments early and doing so consistently over time is essential. This will allow you to harness the power of compounding, which can be a tremendous ally in growing your wealth. Remember, time in the market is more critical than trying to time the market. Here's some additional advice to guide you. Make full use of the financial education resources available at your university. Enroll in courses related to investing, taxes, and personal finance. It's also wise to consult financial advisors and tax professionals who can tailor your strategy to your specific needs. It's equally important to be wary of unsolicited advice. Always do your independent research and verify information carefully. Wondering about retirement by your mid-30s? While it's tempting, early retirement requires a significant amount of savings and a very high rate of return on investments. Given the income potential described, achieving this goal may be quite difficult. Keep this in mind while planning your financial future. Let's summarize the key takeaways. Starting early is crucial. The earlier you begin investing, the greater your opportunities for growth due to compounding. Keep your strategy simple by focusing on low-cost index funds and maintaining a diversified portfolio. Stay disciplined. Stick to your investment plan, even during market fluctuations, and you'll be on your way to securing your financial future. Thank you for watching. We hope you found this guide helpful in planning your financial future as a young athlete. If you enjoyed the content, please give us a thumbs up and consider subscribing to our channel. We'd love to hear your feedback and thoughts in the comments section below. Until next time.